Okay, hello everyone. Welcome to the Art of TradeStation. I am David Russell, the VP of Market Intelligence here at TradeStation Group, and today we're going to be showing you some tools and techniques for swing trading. All right, so before we get started, I wanted to quickly share in the chat a zip file. This has a whole bunch of tools in it that I'm going to be using. If you want to go ahead and download it now, I'll be getting to it in just a second. First, I want to read some important disclosures. The following presentation is for educational purposes only. All symbols and trading ideas discussed by the instructors for demonstrational purposes only are not recommendations. This presentation is not an offer or solicitation of any kind in any jurisdiction where any TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone. Options and futures trading carries a high degree of risk and is not suitable for all traders. Please read the disclosure information handout or the electronic disclosure information available on the TradeStation website. Okay, it's great to be with everyone. Let me go ahead and, everyone. Let me see if we get the link now. I think everyone makes that mistake with Zoom at one point or another when we send it just to panelists and not to everyone. Okay, so if you open this link, this is what you're going to see. It's a zip file, this is. Okay, so the zip file has 3 items in it. It has a PDF, which is this. This is just the slides that I'm going to be showing you as a PDF. It has a workspace, but first thing you want to do is you want to double click on this thing, the easy language document. This will bring in a series of indicators that are going to be used. If you you may have some of them already if you've been in some of my other webinars, but there are some new ones. There's some interesting things that I've been developing here to kind of facilitate swing trading. So I wanted to share those with you guys again today. So once these have been imported, I'm not going to do that because I already have them. But you would hit finish and then it would import them. You're going to double click on this, which is the workspace, which is this right here. So those are the steps you want to go through. And now before we do that, I wanted to briefly just tell you a little bit about myself and some of the things that I have been working on recently. Let me just go to the TradeStation website right here. If you go to tradestation.com, just so you guys know, I'm the VP of Market Intelligence, as I said. And if you go here on TradeStation to Insights, this is a blog that I run. And a few articles in particular I did want to mention. This article today about what's happening with earnings. You know, we had a really nice rally today in the NASDAQ. A big part of that was because of Qualcomm and Etsy, which is really interesting. But this week we have seen a return to some of these volatile, traditional brick and mortar stocks like Bed Bath & Beyond, Gap, things like that. It's kind of interesting. And as we move into the holidays, and also as these companies start to report earnings, because we're going to start getting into some of those traditional brick and mortar earnings in the next few weeks, they could get interesting again. So I wanted to just mention that. Another thing in this article that was interesting is we talk about the weakness in Moderna, the vaccine company that cut its guidance today. Pretty significant downside in that, and it's pretty interesting to me because on one hand, you see the most of the economic data recovering, this swing back to brick and mortar, and then at the same time you see the vaccine guidance getting cut. So it's like these things kind of point in that direction toward things going back to normal. And then in another kind of piece of that puzzle, today Peloton, which was a classic coronavirus stock, just got whacked. Bad results. Also, Activision Blizzard video games were some of the beneficiaries. So it's just kind of interesting to see, things returning to normal and some of the pieces falling into place. The thing I love about the stock market is it's always trying to tell you a story. And in this case, it seems to be telling us a story about kind of return to normalcy. One other article I did want to mention is there was an interesting and pretty bullish call roll in Ford Motor. A couple of days ago, we wrote about it here, and the stock has continued higher. Don't forget, there's going to be the Rivian electric truck IPO in the next week or two. Ford owns more than 5% of Rivian. Amazon does as well, but Amazon is a much larger market cap and probably less sensitive to something like Rivian. So it's interesting, what's happening here with Ford. Ford hitting a new I think decade high. The other thing about Ford that's interesting, I just have to mention, is here we have Tesla. Here's the chart of Ford. If I go to a weekly chart here, you can actually see with Ford that there are some levels here that we're breaking that go back. This is 2011. So we're looking at, an interesting kind of, let's go to a monthly chart. We're looking at some space on the chart now that we're going back many years, like a generation. Actually, if I go to this, and to me, I think the narrative and the price action in Ford is just kind of interesting and looks like it's got some people chasing into it. So one just mentioned that we've been writing about Ford for a while. We had done some ideas on TradingView on it when it was down around 12 or 13, but it's been an interesting name to be watching as it kind of goes from being a value stock to being kind of an explosive, transformational, strategic story, along with the fact that the auto business is incredibly strong right now. The pricing, and if you dig into some of these articles we did on the autos, there's a lot of stuff about the pricing of autos that's looking for some significant margins. The last thing I want to do before we get back to the webinars, if you go to education and then you go to platform, all the old webinars that we've done, Jesus and myself, are archived in this part of Market Insights, and we have all the downloads and everything there. So wanted to share that with you guys before we dig in. Okay, so hopefully now you have been able to import the ELD and get your indicators going. And now I want to just go through with a few things. First of all, kind of defining swing trading. Most of us basically know what it is, but it's a technical based strategy. It's not based on fundamentals. It's not really even based on macro things like I like energy stocks or I like tech. It's based on buying and selling stocks within established multi-day or multi-week trends. Swing traders look to benefit from longer-term patterns as trends develop and continue. Swing traders attempt to buy higher lows, looking for a higher high to follow. Okay. Swing trading is technical. Swing traders look for opportunities where the stop losses based on technical levels can be significantly closer to the current level than the intended upside target. Now, I'm always going to be talking here, assuming that we're looking at long opportunities. This works mostly for long opportunities. Me personally, when I look at short opportunities, usually they're stocks that have the potential to just kind of crater. Swing trading to the downside, it works sometimes, but in this kind of bullish market, I'm mostly focused on, just kind of upside swings. The thing about looking for this kind of, when you're near an entry point, is that the risk reward is in your favor. And if you're right half of the time and your trade is right half the time, but you have, 3 to 4 times more upside than you do to the downside, then just by being right half the time, you'll have a profitable trading strategy. So I'm looking for most of these to have a time frame of 2 to 4 weeks. Okay, so when you really look at what a swing trade is in many ways, in some ways it consists of 2 things, and there's really various ways to find them. First, we need an upward trending stock, and that's there's a lot of ways to define that, but then how do you actually find it and define it in terms of seeking it and finding it? And there's 3 techniques that I'm going to show here with the workspace that we're using. The first one is you want to look for stocks based on their moving average order, which is what I call it in the workspace. Just look over here, move average order, this. So this will tell you when stocks, and then you can change this. This is a custom indicator I've created. You can go to studies, edit. You can see it takes a 50 and a 200 day, but you can change these. And what it will do is it will show you when the, you can sort on this, and all the stocks that have a 50-day moving average over the 200 are in this order. You can notice as a greater than sign. And then if I click on it, you'll notice as a less than sign, it's color coded. So I can just instantly find all the stocks in a longer term uptrend like that. And then everything past there. And I'm going to show you how to work with this, where you can erase the ones that don't qualify and stuff. So that's the moving average order. Next is longer term price changes, stocks that are up a lot, like 30, 40, 50% in the last 6 months. That would be a stock that, it's not always going to be a clear trend. Sometimes you're going to have some crazy jump and then it hasn't done anything. But for the most part, that's going to be stocks that have been trending higher. And then the other thing is when you have a moving average cross, which can kind of tell you that the momentum has shifted toward the upside. Now, the other thing is we need to find pullback. So how do we actually find a stock that is trending upward but has pulled back? We can look for things that are touching their moving averages, things that are down in the shorter term, and things that are touching their Keltner channel. Now, I'm a big fan of Keltner channels. I find them easier to use than Bollinger Bands. But this, for example, is the Keltner channels on Ford. And I'm going to get to some examples of how this has been a good strategy that I've been able to write about at different times. But the thing about this is I've created 2 custom indicators based on Keltner channels. Now, both of these are things that I modified using easy language. And this allows you to find stocks, I'm going to show you right off the bat, that are near the lower band of the Keltner channel. It will highlight companies that have within 5% up or down of the Keltner channel. So for example, I don't know, I just looked at this now. It has a stock, I don't even know what these come into. PSX is it's a oil refinery. All right, so here you see it's right at the bottom of the Keltner channel. And so when you find things here that are near when this number is near 0, that's the distance from the bottom of the channel, which is going to tell you things that have pulled back. So we can combine this with the other screening techniques and find stocks that have pulled back. And then on the other hand, we want to find stocks that have been trending higher. Let me just see. A lot of error codes came up with the TS chart. Okay, it looks like some people still have not up. All right, so you're probably running it in 5. I mean in 9.5. If you email me, I'm going to share my email. And let me see what I can do to help you with that. drussell@tradestation.com. The indicator should still work. What I'd recommend you do is load the indicators and then take a picture, a screenshot of this webinar. And then what you can do is you can basically build it yourself. The indicators should work on your older install of TradeStation, but the workspace itself will not. Does this strategy work with futures? This is basically intended for equities. Most of these things are longer term strategies that I don't think you would use on futures. These are looking to hold for 2 to 4 weeks, and futures normally would not hold that long. Okay, I'm going to keep moving here. All right. So I'm going to go through 5 different techniques of how to do this. So the first thing we want to do is we can use radar screen, find stocks that are touching their 21-day exponential moving average. Now, there's a lot of people who really like the 21-day moving exponential moving average. I use both simple and exponential moving averages. And in this case, let me just inflate this. All right, so what we have here is we're going to first be looking at these 2 indicators. And one of these is set to 21-day and one of these is set to 8-day. They're the same indicator with 2 different values set. And if you wanted to change them, you go in here, you go to studies, edit study, and then you change the length. Now, what this does is this will tell you stocks that are touching today, they're rising 21-day exponential moving average. And that's kind of interesting because it'll also tell you ones that are when the moving average is falling. Like this one, we're talking about the gold line here. You can see it's falling. So that one actually is touching it, but it's negative. So when looking for stocks that are potential swing trades, we can look for the stocks that have this green 21. And for example, this would be a potential example of MGM. I think they reported earnings today, but this would be a potential example of a stock that has an uptrend in place. You can see, for example, as long as it stays above the 21-day exponential moving average, this is, potential kind of swing trade opportunity right here that comes just from this. I didn't even know what these were going to be because these change like constantly. Here was Etsy, for example, had a huge rally today, but you can see this morning it opened right at that level. So that's just kind of interesting. I also think it's interesting that you can use, in addition to the 21-day, the 8-day. This will give you a lot of signals, but one thing that I actually wrote about a month ago, I was writing a lot about Tesla because they had some really strong numbers coming out of the September quarterly sales report. This stock was basically hugging. This is the blue line, the 8-day exponential moving average. You'll notice it was hugging this 8-day exponential moving average here, right on top of it. So this pattern I'm telling you about, this signal on the EMA test 8, it would have basically given you Tesla basically for a period between about the 27th of September, maybe right around here, the 24th, all the way through roughly the 8th of October. So this would have given you 1 to 2 weeks of bullish signals in a name like Tesla. So I just think it's interesting to realize that these are the sort of things when you can kind of look back, and it's useful because it just kind of glows. And the thing I like about this is if it doesn't have a result, you'll notice that it just doesn't give you any value at all. So when you're using Radar Screen, you put in a list of stocks, you click on it, and it's going to give you the list. Boom, you can look down the list. And then the nice thing is you can have your own list. This is the S&P 500. You can put your own list of stocks in here. And then, if you're watching maybe 20 or 30 stocks waiting for an opportunity to buy, one day it just kind of lights up, and maybe that's your opportunity. Where can we find the custom indicators and the workspace? Let me share that with you again. And then if Manolo, if you could maybe paste that again a little bit for people. All right. So, for example, I showed you this on the 21-day, but here's just some examples. For example, like Apple. If you look at Apple, this had some really interesting signals on Apple in July. You can notice that it touched. This would have given signals. The same indicator would have given signals here, here, here in Apple. And then what's also interesting is it would have given a signal here. But what's interesting is you can also notice that it knifed down. It just sat there. And then once it closed under that level, you can see that we had some weakness in the name. So that's just an example of, obviously at any point in time, trends don't last. But this is an example of what I'm talking about by a triggering low. So a person could have entered it here. And if it closed under the 21-day, they're out. And in this case, you could have bought it here, and then you would have had your stop just under it, and you would have been stopped out, and you would have missed that drop. So this is what I'm talking about, is the opportunity for something when you can use, when the technical event happens, that's your triggering low, that's your signal to enter. And then if you can basically look for the opportunity of 4 times of the upside versus the downside risk, and if you look at Apple here, and if you look for it to basically make similar bounces to where it had, you would have had more than 4 times of the upside. In a case like this, these could have been opportunities. You could have played the upside. And then this would have been an example of, having a limited downside to the stop loss. This is an example of how this 21-day alone can be really useful for looking at swing trading. Netflix is another one that had a lot of signals on the 20th of September, right around here. And then also on October 20th, again, these would have been bullish signals that would have come from this pattern on the 21-day exponential. And Dell, which is one that I wrote about on TradingView, I need to actually share that as well. I'm going to share TradingView with you guys because I do ideas over there. But this was one right here that we actually had put a signal out on this when it pulled back, held that 21-day exponential, and then had a nice kind of extension there. So anyway, that's the 21-day exponential, and that's how you use it on this chart. Next, going to slide 9. Now remember, these slides are available in a PDF version in the zip file that I shared. Okay, question about custom symbols list. I'm not sure about that. I don't always use that, so I'm not sure how to answer what the timeline is for fixing that. Okay, so use time-based changes. So this is another relatively simple thing. But what I often do here, just so you know, is I start off with something in Radar Screen, and I just erase stuff, I sort, and then I just reload it. I just always I love the S&P. To me, it's just an easy way to build things. So the first thing we want to do is this time we have the S&P right here. We want to sort. We want to say I only want to find stocks with a 50 where 50 is greater than 200. All right, and then I'm just going to go right down my list. Here's my line. I'm going to just hold down the shift button, page down, delete. Okay, now we've got a list of companies that have the 50-day over the 200-day moving average. Now what I'm going to do is I want to find the ones that have pulled back in the last week. And there we have a list. Now, this is not always going to give you, great signals, but it's going to find off the bat stocks that are in uptrends that have pulled back. A stock like Moderna here Now, one of the other things I'll mention is you can look at these other columns. 21D is 1 month, 63D is 3 months. So when you see like, really gnarly numbers, like really big negative numbers, those are also like things where the uptrend is not as clear. Like Moderna down, 30% in the last 63 days. That's not really an uptrend anymore. But you can look down the list, and I like to just kind of look at them for names here. That what I do is you click on it like this. And now everything that, because we deleted the other ones, everything on this list now has the 50 over the 200. So I like to just kind of look for them now that have pulled back gently, like 3 to 5 to 6%, 3 to 5% in the last week. Here's some. And like the thing is, you have to always think about what is the market doing. When the market is down a lot, that's not going to give you the same signals. In this case, I like to just kind of look down the list, and then also look like in the last month. And what I often like to do is look for stocks that are kind of down just a little bit in the last month. That might be kind of, and here again, you have a stock that is near the bottom of a range. So this is just a sort of technique. You can just look down the list and always be finding them, because what you have is you have the 50 over the 200. That's giving you your uptrend signal, and then you're using the negative number on the 5D or the 21D. That is your pullback signal. So you're just kind of combining those two. Okay. Technique 3, using Keltner channels. All right, so we're going to stick with the same thing of the 50 over the 200, and this is slide 10. And now what we're going to do is we're going to sort by the Keltner channel percent, this indicator. Now, this has a special thing built into it, a special value. If you go to studies, edit, you'll notice that it accepts, these are the normal settings for Keltner channel, the length, and then the number of average true range. Keltner channel is based on average true range. And these are the settings that are part of normal Keltner channel. But I added another value called highlight threshold. And this is going to be set in a decimal that is basically a percent, right? So, 0.05 is 5%. So what does this do? If it's within 5 percentage points on an absolute basis, it will highlight. So this is useful because, and you can change it. If you set it to 0.1, then it will change you. If it's within 10%, it'll be in white. And the nice thing about this is you can be looking at a whole bunch of stocks, and you can be like looking down your list maybe for things that have pulled back in the last week. And then you can just see, oh, wow, this one. So you can be sorting on this, and you can see it over here. You can just go down the list, and it's really useful that way because it highlights when it's within that threshold. You can sort on this, and then you want to look for stocks that are kind of near the bottom of the Keltner channel. And from my perspective, I've been kind of looking at some of these names like Hess and some of these energy stocks that have, have some really interesting rallies, and now they've pulled back. And the question is, energy is a tricky thing here because on one hand, there's a lot of bullishness priced in, but we also have limited global supply at a time when the economy is reopening, and we also have energy as the strongest sector on a year-to-date basis. My overall kind of trend following approach is often based on looking for that momentum to continue into year end. So I'm leaning toward continuation of upside in energy, even though it's been painful in the last week or so. And what's interesting is that this is coming off. You can see here's our Keltner channel, and it's right on top of that Keltner channel, and that's how we get our signal. So Norton LifeLock, Philip Morris, these are down touching the bottom of that Keltner channel. Now, what's interesting about this is has given some good signals at different times. Another one I did for TradingView was Broadcom. We wrote about it right down here, and it was right at the bottom of the Keltner channel. This was an interesting one. You'll notice a 50 was over the 200. It was just a classic. You can see the swing trading in this. And then what's interesting about this is, and sometimes this happens, it accelerates. So you have a steady uptrend. And what I'm always hoping for, and don't always get, but I'm always hoping for this, because you might get the bounce and it pulls back, the bounce and it pulls back, and then sometimes you get the bounce and it keeps going. So anyway, This is just an interesting one. And I was pretty bullish on Broadcom because basically the market was getting hammered back here in early October, and this stock was making a higher low and it was in a tight range. So we had published that over here. Let me also share this with you. We do this other thing on TradingView. I'm going to share this. We publish ideas here, including some analysis today of the S&P 500 that I think was kind of interesting. You might want to check this out. I don't want to get into it now, but there you go. Anyway, that's an example. Broadcom is one that had a good signal there. United Parcel Service earlier in the month was just kind of stuck down here. Now, what's interesting is when things come down this low, doesn't always mean they're going to go up, but you're often in a place where at least you have the likelihood or odds are more likely that it's going to stabilize. So, it's going to be the kind of spot where you're going to get something of a bounce, but, odds could favor. But it doesn't mean that it's going to be significant, but it's an area where if you're interested in a stock, when it hits that Keltner channel, very often you're in a place where you're going to have a few days of breathing room, at least to be wrong before you get stopped out. So it tilts the opportunity in your favor by looking for that Keltner channel. So that's another approach to doing this. So again, you're going to look for things where the 50 days over the 200-day and it's near the Keltner channel, which is defined by being within -5 or 5%, using the Keltner channel percent indicator. Technique number 4 is using exponential moving average crosses. Should say crosses. Using radar screen, find stocks with positive readings for days since MA crossed on MAX days since. These names are not always super beautiful, but I try and keep them clear so I know what I'm looking at. MAX days since, this indicator here. Now, this is one of my favorite indicators that I've created for you guys. And what it does is it tells you how many days since a moving average crossed another moving average. In this case, it has the 8-day and the 21-day, which a lot of people use. And you can customize it by going in here and you can set it to simple or exponential. I have it set to 8 and 21, as you can see. Now, what this is going to do is this is going to give you a positive number if the 8-day is over the 21-day, but it's also going to tell you how many days. So for example, for a stock like, I don't know, Wells Fargo, the cross of the 8 above the 21 was 14 days ago. Let's go over and zoom in on this chart. And you can see it's the blue and the gold line. The cross was there 14 days ago. So this is going to allow you to, and then if you look at stocks that have really high values, like Tesla, the cross was 69 days ago. So it was way back here somewhere. Probably right on, I don't know. Anyway, so what we want to do is we want to erase stocks with negative values. Again, I have a threshold built in that will highlight. You can just go in here again. That's something I added recently. There's a new version of an indicator I've shared with you guys previously. I added the highlight threshold. It used to be called MA cross. I added the X this time to distinguish it. So we're going to go to ones that have negative numbers. Remember, the threshold uses an absolute basis. So if you put in 5, it's going to find every -5 and +5. Okay, so we've erased things that have the 8-day under the 21-day. And now we're just going to go and do similar approaches as we would with the moving average order. We're just going to look for stocks that have pulled back in the last week and start looking down the list. And some of these, it's interesting, look at a stock here like Mosaic. I'm not sure what to make really these fertilizer stocks here. Some of the commodities have not done very well recently post-Fed, but here you have holding an old high. It's kind of an interesting sort of opportunity. And then if you look down the list, and again, a lot of these are names I haven't looked at recently. A name like Quantum, this is, they build like, they do engineering for governments. They build like bridges and giant civic projects and stuff, but interesting bullish gap. It's an industrial stock, and interesting. Here we have again a series of support areas, And again, this one is being flagged by the 5-day pullback. But if you look here, you'll also notice that it's, well, in this case, it closed well above the Keltner channel. But this is just an example of some of the ways you can find it. So you can see here, this is another example here, making a slightly higher low. Remember, we look to buy higher lows, looking for higher highs. So you have a low here and you have a higher low. This is an example right here of how you can potentially find swing trades using this moving average cross combined with a 5-day pullback. Again, we can also just go and say, let me see the ones that have the 8-day above the 21-day that are near their Keltner channel. A lot of these are going to be similar to things we might have seen earlier. Like there's Mosaic again, because it's right on top of that Keltner. One of the things we don't want is things that are like 59% under the Keltner channel. This is kind of just damaged. When you get to that point when you've just totally ripped through the channel, it's the signal is not as positive in your favor. And something like this, this could be interesting in 3 or 4 weeks, but not probably in the near term. And this is probably a name here that's going to, press down around these levels. There's going to be an opportunity potentially for this to be tested. It takes some time for this short-term momentum to turn more bullish. This is a pretty, sharp series of candles with lower, it opens at a high and gets pushed lower. So that's why we want to find things that are near the Keltner channel, but not totally below it. The next one is you can just sort right off the bat of the days since MA cross. This is the output. So you're going to see the indicator has 2 things that we look on this. The indicator has, this is the name of the indicator in italics, and then it has 2 outputs, days since MA cross, and then the other one is simply called the moving averages. So this will tell you what it is, because you could set this. I know some people, they trade the 5-day simple against the 20-day simple. You could set the 50-day simple against the 200-day simple, and it would just say, 50S versus 200S. If you go ahead and you change it, I'm not going to do that, but you would do it by going to studies, edit, and there's your inputs that you would change. Just make sure you spell simple and exponential correctly. And then the other thing is, now that we know, okay, all these stocks have the 8-day over the 21-day, we can now just say, let's look at the ones that are touching the rising 21-day. We're right back to our list of stocks here that are potential kind of pullbacks of the rising 21-day exponential moving average. Anyway, and then the last thing is, yeah, those are the ones for this. That was technique 4 on slide 11. Technique 5 on slide 12. Find recent 50-day moving average touches. So here's another special indicator I created called days since MA test. What it does is, when using this indicator, what it does is, now what I'm going to do is, because remember, I erased a bunch of stocks. I'm going to go select A, delete. Now I'm going to go to data, add symbol list, S&P 500. Okay. While that's populating, what we're going to do is, this is going to tell us stocks that recently touched the 50-day simple moving average. A lot of people trade stocks at the 50-day moving average. Now, one of the kind of annoying things is that sometimes the stock will touch the 50-day moving average, and then it will sit there for a few days before it starts rallying. And that can be frustrating for people. So the thing is, what happens if it touched 2 days ago and it's not touching it today? What do I do? All right, that's why we created this indicator. So it works the same. It uses the same logic. All these things I've created, they use basically the same grammar when they talk to you. It's going to be a positive number if it's above the moving average or the signal is above, and a negative number if it's below. And then it's just going to give you the number of days. So, for example, a stock like this, Lennar, the home builder, it has 2. That means it touched the 50-day moving average 2 candles ago, right here. And the fact that it's a positive 2 means that it's above the moving average. So if you look down here, the negatives, like Yum Brands, okay? It touched the moving average 2 days ago, but it's under. It has a -2. So what we might want to do is again, let's find the stocks that have a positive value. So we're going to go up here. Now remember, you always sort on the columns by just clicking on them. So we're going to find everything that is 0 and less than -1, hold down shift, delete. Okay. And now we're going to look for things that have not rallied a lot. You're going to find stocks here that have huge values. Probably they jumped a bunch, like Etsy touched the 50-day moving average 17 days ago right here, and it's been cranking since. Now we don't want that, Qualcomm, things like that. So you might look for things that have been not up so much in the last 5 days. So here we are again. We're looking for things that have maybe pulled back 3 to 4% they're not up a lot. For me, in the case of something like this, anything that is kind of under 2 to 3% positive is going to be potentially interesting because it might have hit that level, bounced a little, and be good. Now, the problem with this is some of these are well above that moving average. So you might also want to say, I only want to see the ones that touched it in the last 2 weeks. And I'm going to just go down here. And again, let's just kill everything that has a value greater than 10. And now we're looking at a list of stocks. All the stocks, we have 128. These are 128 members of the S&P 500 that touched the 50-day moving average in the last 2 weeks. They're above the 50-day moving average. And now we're working with a list of stocks that are more recently pulling back and crossing the moving average. The other thing, again, is we have still this Keltner channel, which, again, keeps giving us mosaic. So those are some of the other signals that you can use for this. Okay, there might be some people, I'm going to repeat what I said before. I'm not sure how to upgrade. I always get this question, and I need to check that. But what you can do is, if you take a screenshot of this, of my workspace here, you can create this yourself. The indicators will work on 9.5. You can import the indicators and you can build them like this. The only thing is, I think it's set to 50 SMA. You might need to change some of the inputs. For example, EMA test, there's two instances of it in this workspace. You're going to have to set 1 to 8 and 1 to 21. I don't know what the default values necessarily are. You might need to change it for moving average order as well. But the nice thing is I set it up like this, so it's always visible in front of you. Okay. I'm going to look at some questions before I keep going. I use the indicators you publish in TradingView. Thank you. Yeah, we publish TradingView indicators as well. Will you be sending out the slideshow? The slides are in the zip file. The webinar should be available on YouTube in a couple of days. People talking about going short. Like I mentioned, I have not really been doing very much short stuff recently. Aside from shorting gold miners recently, I caught a little bit of a downward swing in that. In some environments, I have used this. I mean, it has to be just a steady downtrend. I haven't found a lot of stocks that have been super reliably in downtrends in this market. And a lot of them, so I don't like it for shorts in this environment right now. All right, how do I copy those slides? Let me just look. Okay, keep going. We're now going on to, that was slide 12. Using scanner. Now this has been with radar screen. Now we're going to use scanner. Radar screen requires a list of stocks. Like I said, you can input your stocks. I honestly just keep a spreadsheet sometime, and I've actually used that in some of my other webinars. I have a spreadsheet with all the ETFs, like the holdings of all the XLE, XLF, XLI. If you go into some of my previous webinars, the webinar about how to trade any market, in that zip file, there is an Excel spreadsheet. The Excel spreadsheet has the holdings of all the major ETFs, and it's based on using sectors to trade the market. And if you look in there, that's another resource you might want to use. I did that one a couple of months ago, and it's on the Market Insights page under Platform. Now, anyway, radar screen requires that you give it a list. It has a bunch of built-in lists like S&P 500, NASDAQ, but still, you know, Tesla wasn't in the S&P until recently, and some other interesting stocks are not in the S&P. Like NEO, one of the top traded stocks often on TradeStation, is not in any index. So what do? You can use Scanner as well. So now the thing about Scanner is I cannot share it with you. I need to build it, and I'm going to show you right now how to do that. So all the indicators that I've given you in Radar Screen can be used in Scanner. You just need to be careful to make sure you get the settings right, and we're going to show you how to do that. So let's create a scan right now. If you go to apps, the scanner is the flashlight. You probably have it over here somewhere. I moved it. You can drag these around, but just look for the flashlight. Let's open this up. All right, I'm going to create a scan. Let's just call this, Master Class November 2021 swing trades. Okay. The first thing you're going to do now, this is slide 14. You can just go right off this. Just follow these step by step. All right, all stocks on the first page, hit next. Then I have these set as my default values, but I'm going to remove them just to show you how to add them. I'm going to go first of all to volume. See these pre-built buckets, volume, average, 10-day. These are built in the scanner, and using these will make your life easy, faster. It'll make everything go a lot faster. So I'm going to say greater than. I'm going to select the greater than. Wait a second. And then I'm going to type in the word 500,000, no commas. Then I'm going to go to capitalization. It's another little folder here. Market capitalization greater than 5,000, which is 5 billion, because it's in millions. Next, I'm going to go to price. And then percent change, and percent change 5D less than 5. Percent change 5D less than 5. The reason is if a stock is up more than 5% in the last 5 days, it probably hasn't pulled back. So it's not, not what we're looking for a swing trade. Maybe it's up 2% and it's a potential swing trade. So, we don't want to just say it has to be negative, but we want to be less than the value 5. All right, now we're going to bring in, these are indicators that are built into TradeStation. First of all, moving average one line. This is just your standard moving average, simple moving average. You go down here to indicator. So I have the 50 and the 200-day moving average on my chart up here. And you can go down now and bring those in by going moving average one line. And then I'm going to go over here as well. And I'm going to select, I'm going to say, in this case, moving average one line is greater than moving average one line. And we're going to go and we're going to adjust the settings. Okay, so this moving average has to be bigger than this moving average. But we have to click on the button, and you'll notice this one on the left is the 9-day by default. So we're going to change that to 50, and we're going to change this to 200. This is now going to only find stocks where the 50-day moving average is greater than the 200-day moving average, which is similar to this indicator that we have over here. You could use this indicator. Just remember, it's going to be a text string. You have to use quotes. A little bit tricky. I wanted to show you that there's a lot of ways to skin a cat on this. And this is an example of using the other built-in indicators on TradeStation. You could also mix and match moving average against exponential moving average, or moving average exponential, as it's called. So there's a lot of ways you can do stuff here with Scanner. It's pretty amazing. Okay. Now we want to say MA test days since. There's another indicator. It's one I gave you. If you've imported the ELD, it will be on your list here. It's called MA test days since. And we're going to set it to greater than 0. Now, the only thing about this is you have to use it twice. I wish you could say between, but you cannot. So I'm going to go back here and I'm going to go indicator MA test days since. Less than, say, 11, 10. That's what I have. All right, I hit run. Now you'll notice that this is very similar to the things I've been doing in Radar Screen philosophically. The difference is that this will look at the whole universe of stocks and not only members of the S&P 500. Now it takes longer to run. It's running now. We'll come back to it in a second. So it's just important to realize that for this, you have to put this in twice. You have to say greater than 0 and less than 10. This is going to find stocks that tested their 50-day moving average in the last 10 days and that are up less than 5%. and that have a 50-day over the 200-day. All of these are basically part of the hallmarks, or we're describing uptrending stocks. See, it's going slow now, so we're going to just have to keep moving it. Narrowed it down from 11,000 to 800, and now it's crunching those. Okay. I'm getting some other sound there. I'm not sure if someone else. All right. All right. Bonus indicator I want to give you guys. I'm always playing around, coming up with ways to do things better. I'm a big fan of radar screen. I like to dump lots of things into radar screen to monitor them. And I like having indicators that can do multiple things. I like combining approaches, moving averages with volatility indicators and things like that. So I gave you a bonus one that I created. And if you're interested, we have our masterclass that is on You Can Trade, and you can learn the basics of easy language. And basically, my skills are very simple that I learned from working with people like Jesus, and you can learn how to customize studies as well. So basically, this is, I call it Keltner momentum. What it will do is it will find stocks. Let's first of all erase this and bring back in the whole S&P 500. This is going to find stocks that have a 21-day above the 50-day and are near the bottom of the Keltner channel. And it will only give an output if it's a qualifying, if it has a signal. Otherwise, it just gives us nothing, just a null output. So this is an example. You could run this in Scanner by simply saying where the value that it produces is greater than 1, and it will give you those results. So right now, this is my Keltner momentum on the S&P 500. It found these stocks. These are stocks with a 21-day exponential is above the 50-day simple and are within a certain percent of that lower band. And if you actually go, you can customize it. It has also a proximity threshold. So this is something also here that's going to be within 1%. Now I think I changed this one so the low, not the last, is within that percent. But I want to just kind of show this to you guys because you can get into it yourself, play around with it, and adapt it as you like. The only thing I'd recommend is that you change its name so you don't mess up what I created and make a mistake. And sometimes it's hard to go back. So you want to do is, here's my actual code. You can go here to save as, give it another name, and then make changes on it. So I want to just share this with you. Easy language is really powerful, really fun, and you don't want to think about doing masterclass to learn more. All right, some additional points I wanted to cover. Is there a way to get Scanner and run? Let me go back to my Scanner before I wrap up. These are the results we just did. Where is it? Masterclass. Here it is. Here are my results. So there's the one I just did. You can go to schedule on SLSU. You can schedule it to run like every day at 8 p.m. Okay, now I'm going to hit OK. And now every day at 8 p.m. tonight, it'll run again. In the meantime, these are my outputs. So I can do is I'm going to clear this so you can see it a little bit better. And I can sort on 5-day. And I'm also going to now look for the stocks that have pulled back in the last 5 days. The only thing I want to show you is you want to click on this little symbol linking. You'll notice that this has a green. Radar screen has a green. So if I click on something here on radar screen, it comes up on the chart, and we want to do the same thing with Scanner. So by putting that on, if I click on MT to European steel stock, that came up as a signal. And then you can look down your list as well. So keep coming, getting this mosaic. So that's how you can do that with Scanner. Remember, a lot of these other slides that I showed you guys, you can go back and apply the same logic in Scanner following these steps. I kind of did it this way so you could use the same principles. The one thing I always remind you about Scanner is when you're going in and you're working with on the scan criteria and you're working with these things, always check these values, because 90% of the time, if your Scanner doesn't work, it's because one of these things is wrong. Maybe you're actually comparing like the 20-day moving average or something. So just always be aware that that's often where your trouble is going to be. I speak as someone who has wasted lots of time and learned to always look here first when I have a trouble with scan. Okay. some other points I did want to cover. Like I said, in general, looking for entries that have 2 to 4 times potential upside versus the downside. Stop losses can be placed under the triggering low or when the move begins at the signal in question. One other thing, let me just quickly mention, there's this one other indicator, one of my favorites, average option volume. This allows you to highlight stocks that trade a lot of options. You'll notice Tesla, Apple, these are the most active underliers. If you guys like to trade options, you might want to just do this. All right, if it doesn't trade 10,000, just go away, just erase it. You can do that as well. You're often going to find stocks have tighter bid-ask spreads when they trade more than 5 or 10,000. Another thing about this is you can change the coloring. If you go in here and you go to studies, average option volume, I have it set to 21 sessions, and I have it set to highlight or to color it purple if it is over 10,000, but you can change that here as well. And again, that's just kind of useful because when you go down your list, you're going to see stocks very easily that are highlighted based on good underliers versus not good underliers. And you do have some of these stocks that are really active that just don't trade a lot of options. And that can be frustrating when you're looking to trade options. You get those stocks like, I don't know, the one I always joke about is Smuckers. It's in the S&P. It used to at least be in the S&P 500, and it trades like 10 contracts a day. And then you get nice stocks that have really good options, like Tesla before it was in the S&P, and you would have, it was always trading, closer to 1 million contracts a day. Okay. Stop losses can be placed under a triggering low or when the move begins at the signal in question. This is slide 16. And the Keltner channels can be used for setting upside targets as well. Some patterns may suggest adjusting positions. You might have a long position on that's working, and then you get some ugly signal that tells you something isn't going so hot. And one of the most reliable ones I find is when you get a false breakout above a previous resistance line. Alcoa had that recently on this is a classic one, but I mean this one right here. On the 28th, it went slightly above its previous high, and then it just failed, right? So that's an example. If you had bought it down here, and you start go up and fail that high, you still could have just said, I'm going to escape there. That's a failed breakout. And that's a pretty reliable signal that you've got some, problem to the upside. Another one was Micron on the 13th. There's many more. These are two that just sprung to mind. Here's a failed breakout on Micron on the 13th of April. It went up to that high, failed, and basically hasn't gone back there since. Also, you can have a shooting star. I haven't seen a lot of shooting stars recently, but Deere had one that I remember I've always talked about, like this. You'll notice Deere. I actually played this swing in Deere. This is way back on another one, but I remember this was one that I had seen using basically these approaches. It had that nice pullback, and then you saw that candle, and that was your shooting star. I haven't seen this recently. A lot of shooting stars, but it's another one to be aware of. That's when you get this big wick to the upside. And I do have a webinar also on Market Insights about candlestick patterns. In fact, there's a link right here. See our candlesticks webinar for more. Which was over here on Market Insights. This is another one I did back in September. Okay. A hammer can be, a useful one as well that can kind of give you some confidence when looking to enter something as a long. So for example, we had Bank of America back here on September 20th. That's a hammer, the long tail to the downside. Again, it was under the bottom of the Keltner channel. Now, this was a time when the market itself was getting really, beat up. It was an interesting signal because it was slightly under the Keltner channel, but the S&P was down at its low at this time. And it was a hammer that basically gave a pretty interesting signal to the upside. The small caps, IWM, had a similar pattern right here on the 6th of October. Marathon. All right, so then we have this other pattern called a kicker. A kicker is when you have a multi-candlestick, you have a drop, it closes at the low, and then it comes flying back really quickly. So look at Marathon at the end of September, right here, smashes down, comes back. Some people like to see the kicker come immediately back. In my opinion, as long as it closes at the low and then instantly, and the next day it comes back and never retests that low, that's really what you're looking for. That basically means you have a rejection of that low, and anyone who sold at that low is just out of luck. This pattern can be pretty reliable. And then another one was CSX Railroad had a kicker right here at the end of September, right around the same time when the market was dropping. And you hit that low, closed at the low, came right back and never looked back. Okay. Moves off, just some other points I want to very quickly mention. And just think about this. Moves often correspond to calendar event like weeks, months, and quarters. You have things like window dressing, but you also have things like Federal Reserve meetings and earnings, holidays. Sometimes the market will just drift higher into a holiday like Memorial Day. I've often noticed you'll get this just drift to the upside, and then like 2 days later, it just crashes. You just get the drift into the holidays, then people come back, and this is a common pattern as well. We all know it in different ways, but it's interesting just to throw this into your swing trading to be aware of. Maybe you're going to actually have the pivot is going to correspond to one of these calendar events. Stocks may run into events after which investors sell the news. This is often true for earnings reports that are expected to be good or bad. Traders may also wait for the news before acting on it. It's often true for economic events like the Federal Reserve. So I just think it's interesting that when you have a stock that's in a bullish sort of thing, it will often trend upward into that earnings report, and that can also be something that can lend credence and validity to your swing trading. And those are that's my presentation. Let me see if I have any other questions. What is your target or exit on General Motors? Honestly, for me on General Motors here, I'm looking for a significant move. And I'm basing it on the next earnings report. From my perspective here going into year end, the autos have significant upside. Read my article. There's some really amazing things with this pricing right now. Car prices are going up at the fastest pace since September of 1980. These cars can name their price. Remember, for years, these stocks, they had to give cars away. Remember, just incentives constantly to sell cars. That is history. These guys are getting the price they want. Their margins are strong. And on top of that, you have companies that trade at 10 times earnings that are going to becoming more electric. And as they become more electric, Tesla trades at 200 times earnings. Not saying GM has to go to 200 times earnings or Ford, but if you get earnings growth and on top of that, you get a Ford go to 15 times earnings, you're looking at upward momentum. So from my perspective, GM and Ford right now, the potential of the multiple expansion plus the cyclical thing we're looking at in terms of demand for autos is a very powerful and explosive, I think, combination. So from my perspective on GM, I'm looking to kind of hold it for a while. For me, it's not even so much of a swing trade. I've often had swing trades when I make 15% and then it goes up another 80%. And I'm looking to hold this one a little longer. It's my personal thing. Okay, the deck is shared in the zip file. Let's just share that one last time. And the last thing I want to do before I go is I want to take one last quick look at cryptocurrencies with you guys, in particular Ethereum. Let me just share. This is the link one last time. My email is drussell@tradestation.com. Go ahead and contact me. I'll do what I can to help you if there are any problems getting the presentations to work. The last thing, ETHUSD is on the TradeStation platform. Ethereum, here is our high from May. Ethereum today, pretty much, you had a high back here around 43.84, and then this is actually, you'll notice it's moved on to tomorrow. Our low was pretty close to that old high. So pretty interesting to me right now, when you look at Ethereum, it appears that we've turned old resistance into new support. I just wanted to mention that because I've been watching it. Those are the key things I'm going to talk about. Hope you guys consider masterclass. And look forward to talking to you all soon. Don't forget to check out Market Insights, and you can sign up for the newsletter and also follow our idea in TradingView. Thank you very much and have a great day. The last thing I'll add is that on Market Insights, if you go to Market Insights, go to Education, Platform. This webinar you're watching now will be here in a few days, probably maybe next week, but it'll be provided here. Take care, folks.